Good day, ladies and gentlemen. Welcome to my channel. Today is June 18th, 2022, and I'm going to cover gold, S&P 500, Bitcoin, and talk about macroeconomy. The passing week has been particularly tough for US general stock market and crypto space. So let's start with S&P 500 and Bitcoin. The present week, in my opinion, was the toughest and most volatile week of the year 2022. Over the past 5 business days, the largest index of the US stock market, S&P 500, lost nearly 6%, whilst largest cryptocurrency fell by 30%. From their all-time highs, S&P 500 and Bitcoin lost 25% and 70% respectively. As S&P is 4% away from its 200-day moving average, the index might be due for a rebound anytime. However, Bitcoin so far is trading solidly under a 200-day moving average. First time since inception. Looks like a crypto bubble is finally popping for real. With inflation pushing higher, the recent print stood at 8.6%, and Federal Reserve surprised market by 75 basis point rate hike versus expected 50 basis points. Fed finally admitted that inflation wasn't transitory and appears to be quite serious about fighting a runaway inflation. But can Federal Reserve actually get serious about containing inflation? I don't think so. Let's have a look at the US 3-month Treasury Yield chart over the past 20 years. By 2007, when US national debt stood at $9 trillion, Fed was able to hike rates by around 5%, which ultimately triggered financial crisis, crashing S&P 500 by 57%. Federal Reserve quickly aborted rate hiking policy and kept rates at 0% for the next 10 years. By 2017, Fed attempted to normalize rates once again, but by the time it reached 2.5%, S&P lost 21% and rates quickly were brought back down to 0%. US national debt stood over 22 trillion by 2019. Presently, we have another attempt, or most likely a pretense, of Federal Reserve to normalize rates and fight back inflation. As Fed rate reached 1.5%, S&P already lost 25% from its all-time high, and US national debt reached 30.5 trillion. So, Fed promises no more easy money and numerous rate hikes going forward. But is it possible in reality? I don't think so. For the past 10 years, average yearly US budget deficit amounted 1.1 trillion. For the past 2 years together, total budget deficit constituted almost 6 trillion US dollars. Even with 1.5% interest rate on 30.5 trillion US national debt, interest payments to service national debt only would constitute around $500 billion. Additionally, even if US budget deficit makes up twice as little as in the previous 2 years, meaning $1.5 trillion, Fed would have to print at least $120 billion every month going forward in order to avoid a default. Apparently, quantitative tightening isn't possible for any reasonable duration in the near future. Very soon, Fed will have to abort and start quantitative easing. Fighting inflation for real would mean hiking rates to at least the level of present inflation. With US national debt standing at over 30 trillion US dollars, the total interest payments to service national debt would amount almost 3 trillion US dollars, which would be impossible since US total revenue for year-end 2021 amounted $3.8 trillion. Such policy would force Fed to print even more money to finance even greater budget deficits, which would cause even more inflation. To sum up, I believe decelerating US economy huge national debt, and rapidly falling US stock market leave very little room for Fed to fight inflation. I think rates will top out soon and Fed will only be talking about inflation, but not taking any reasonable steps. I will make a brief update on gold as video is getting quite lengthy. I think gold is sniffing out what is coming ahead and stood firmly. Despite rate hikes and falling general stock market, gold price remained flat over the past few weeks, which is a very good sign. Over the past 15 months, gold kept grinding higher and so far managed to hold at the retest for the past 6 weeks following the breakout. I believe gold is putting in place a bottom very similar to the one back in March 2021, following which gold had a 10% rally. In short term, gold will be facing a lot of resistance around $1,880 level, which is a confluence of the upper band of the broadening wedge formation and the 3-month long downward sloping resistance. So a couple of more weeks might be needed before gold solidly trades back above $1,900 level and ultimately trading much higher. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.